we've titled How to Optimize Your Payment Process. Then at the end of the time period, we'll open things up for Q&A, and as Bruce had mentioned, just go ahead and submit those in the typewritten area there on the right, and then Bruce will go ahead and field those our way. One of the beautiful things about being in my role is I have access to a lot of great people in our company, both from an IT and an accounting perspective, and if I don't have the answer for you right away, I will be sure to get it back to you. A little bit about me. This presentation really won't be focused about me. I'll get to the meat of the deck here in just a second. I'm here with Store Financial. We're an electronic payments company located in Overland Park. I spent a lot of my career in the payment and the corporate finance world, both with Wells Fargo and other coaching entities in executive training, and I've managed sales teams really all over the Midwest. A little bit about Store Financial. We're an electronic payment company focusing on the gift card, reward, incentive, and supplier payment space. We manage 650 private label card programs for 450 corporate payers. We issue payments in 4 currencies, USD, Canadian, Euro, and British Pound. We have a great customer support department, open 24/7, that handles calls in English, Spanish, and French. And we process about $2 billion in B2B payments to some really great companies that we have as select valued clients. And you'll see some names that are familiar there on the right-hand column, names like Harley Davidson and AT&T and Shell. But the presentation really, I don't want to focus on Store Financial or really focus on me. I want to focus on you as a finance executive, whether you're in the accounting function, you're a controller, a treasurer, or a CFO. How can you optimize your current accounts payable or your current payment process? So I've listed out in our deck here on this agenda a few important things, and let me just go through those briefly. So first and foremost, why is this important? Why is optimizing your payment process important to you? Some pros and cons of various payment methods, what's out there in the industry today. Some differentiators between what treasury banks offer versus some payment innovator offerings that are out there. And I'll give you some differences between those two and talk about what benefits you in each. And then I'll go through some differentiators when you talk about analyzing the people that you pay, and particularly your vendors or your suppliers, how best to differentiate or engage with them, how many payments do you make to them, what are the payment types, what's best for each situation. And then I'll spend the last portion of our presentation talking about virtual cards. And virtual cards are one particular way to pay a supplier. How does it fit into your company's agenda? How does it fit into your payment mix? And then, as Bruce had mentioned, we'll open things up for Q&A. If you don't get an opportunity to submit your question, as Bruce had mentioned, we'll make sure, if you want to email those in or touch base with him, to get those answered back to you at a later time. So why is this important? How to optimize your payment process? Some of your goals as a finance executive should be some of the following. Number one, to improve your payment process to lower or decrease your costs. Accounts payable historically has been a source of cost for your accounting group. How to leverage your working capital. Number three, how to capitalize on opportunities that not only generate revenue, but also where are ways that you can save in the ways that you're paying today. Some of the ways that you can save: improving cash management, extending your days payable outstanding, take advantage of early pay discounts, lower your cost to process invoices through some of the electronic methods, maybe it's an advancement in your ERP. And again, this is all different things for you to think about as it pertains to you as a finance executive, whether you're an accounts payable, whether you're a controller, an executive in the C-suite such as a CFO or a COO or even the CEO, and in particularly folks in the Treasury Department. And here's why. A recent ePayments Rising article from Ardent Partners listed some things that high-performing AP departments do. In fact, what are the organizations focused on? They're focused on a mix of payment methods. So if you think of a method of payment, I'd like you to think of making payments via check, ACH, virtual card, could be a commercial credit card, which is quite often referred to as a P card. And they're also focused on process payment improvements, such as automation, financing. As we look at ranking these items, high-performing AP organizations, the number one thing that they listed, 90% in this survey had said, the number one thing that we are focusing on is having the ability to send electronic payments. So 90%. Next in line, the ability to send rich remittance information to my vendor who's receiving my payment. That came in at 53%. Straight through invoices at 42%. The ability to capture early pay discounts. So if your supplier, your vendor offers you an early pay discounts, do you have the automation in place in order to get your invoices through the system in time to capture those discounts? Supply chain finance programs are available that are out there. 21% had said that that is something that they're focused on. And then the last one was to offer supplier portals for vendors and suppliers to log in and take a look at the payments that they've received. And again, this is an efficiency piece for the AP organization in the fact that these supplier portals allow that vendor to log in without having to call the accounts payable group and spend time on the telephone, where a very quick electronic login would be able to satisfy their need for finding out if a payment's been sent or received. Next, we took a look at what are some of the controllers' biggest challenges within the AP department. Controllers primarily see the process and not necessarily the payment method as the biggest challenge. So if you think about process, think about things like minimizing errors within the payment process itself. 47% that filled out this survey said minimizing errors were their top concern. Lack of visibility into invoices and payables came in second at 45%. Invoice difficulties or manual processes came in at 42%. The cost that it incurs to process invoices came in at 38%. And then paying invoices timely, 25%. The inability to maximize discounts at 18%. And something we'll touch on here in a little while when it talks about different types of payments are ways to mitigate fraud. There's been all sorts of articles that are out there about your stories that you'll see about people creating fictitious invoices or fraudulently submitting items for payment that don't exist. I was at a conference in Chicago a couple weeks ago, and one of the stories that I heard was a person who was in the accounts payable function was sending invoices to the government, and the invoices included shipping and also for the cost of goods. Evidently, the government pays shipping and the cost of goods on separate payments. Well, they had made a mistake on one of the invoices and sent in an invoice for shipping at $100,000, and whoop, it went right through. So one time that goes through, and then they continue to do it, and it added up to millions of dollars in fraud from receiving those payments. Next, with executives, when we look at a study done by Ardent Partners Executives see it as a mix of both process and payment methods as their challenge. So there's a lot to consider when you're an executive in the accounting function as a CFO and a CEO. Number one, to improve the efficiency of my team, came in at 52%. To improve cash management, 27%. Improve my days payable outstanding at 22%. Reduce invoice errors at 20%. Improve visibility into invoice and payment at 18%, and then improve payment performance at 15%. Bruce and I were talking yesterday in preparation for this webinar, and one of the things that he had mentioned around cash management was this whole idea of, rates are really, really great today. So borrowing on lines in your credit facility, basically the rates are so low right now, they're at historic borrowing. But taking into account rates going up in the future, none of us have a crystal ball, but there's really nowhere to go but up, is really improving your cash management so you can manage when your credit facility rates do increase. What are you doing to maximize your efficiencies around some of the other things that you can control? So what's the landscape look like today? As we have analyzed the payment environment, I'd like you to think about where things are here at the year 2015 and a typical B2B payment mix. So it's 2015 and we still have 50% of the payments that are going from business to business in the form of check. Now that number just 5-6 years ago was over 80%, so we are making some progress, but we still have 50% of the payments B2B going out as a check, 35% ACH, 10% wire transfer, and P-card comes in there around 5%. Again, P-card's a commercial credit cards typically tied to a credit facility, and I will talk about what a P-card is and what a P-card isn't. But 95% of typical payment processes cost payer organizations money. So if you think about the costs to write a check or the cost to send an ACH or a wire, there's costs that are involved. So the overarching scope of our presentation was how do you optimize your payments given today's environment. First and foremost, the number one thing you need to do is to know your company. What industry are you in? What does your supplier file look like when you pay your vendors? Do you have vendors that you pay less frequently but they're of extremely high value? Do you have perhaps low-valued suppliers that you pay a lot of payments to? What type of industry are you in? Are you in manufacturing or distribution? What do you know about your supplier and your processes? So know your company. That's the first thing. Second thing is to understand what optimization initiatives are out there for you to consider. We're coming up on business planning time. It's really hard to believe the fourth quarter is here today. I'd really encourage you to dive deep here as you're going through your planning process and understand some of the optimization initiatives that are out there. And then finally, number 3, to leverage technology partners that are available today, companies that are really specialized in the process of helping you optimize your accounts payable function. So that's where things stand today. Where could things be? So as we look at high-performing, best-in-class organizations, I want you to just step back and think about perhaps not only where your company is today, and perhaps where you could take your AP group. First thing I want you to think about is total accounts payable spend. So if you think of your accounts payable file as a whole, I'd like you to think of payments that you make to the government, taxes, and I want you to think about payroll, and then everything else that's left over is what we refer to as eligible spend. So these are suppliers and vendors that you have that you could consider placing in some form of optimization program. So as we think about eligible spend, I want to actually break that off into 3 categories. So within eligible spend, I want you to think of strategic suppliers, core suppliers, and then finally those non-strategic suppliers that you pay every day. And I want you to think about a company that everyone's familiar with, an organization that I can give you some examples. I've got 3 boys under the age of 13, and my wife and I love to take them to Chipotle. I love Chipotle, and they do too. It's easy, great food. And at Chipotle, when you go in the store and you get in line, you've got some options to pick from off the menu. As you think about Chipotle and their strategic suppliers, I want you to think about some of the commodity purchases that Chipotle makes. Things like their chicken and their pork and their rice. Those are large commodities, and those are strategic suppliers for Chipotle. Every now and then you'll go in and the pork's off the menu. And if you're a carnita lover like I am, and the pork's off the menu, you know, you're bummed out because you've got to choose something else. That strategic supplier is a commodity. Next, your core supplier for Chipotle are people like those that supply their cups and their plates and their napkins or some supplies. Those are core suppliers. Non-strategic suppliers fall into this third bucket. These are things like bathroom supplies like toilet paper, the ice delivery man, who cleans the floor mats, who cleans the windows, who comes and does their HVAC repair. These what might be referred to as either transactional invoices that you would receive. Best in class on the right-hand side, think of a payment mix to these strategic core and non-strategic suppliers. Best in class, we're seeing 60% electronic ACH and wire, 30% on a virtual card, and then the rest of the mix would be 5% check and then 5% other. It could be a purchasing card or some form of an electronic transfer. What percent of your eligible spend has your organization converted today to an electronic method? I was at a conference in Chicago, a separate conference than the one I'd mentioned, and I was in a room of manufacturing professionals in the AP side, and when we asked the question, how many of you are still writing the majority of your payments with check, 80% of the room raised their hand. So it's okay if you're still writing a lot of check as your primary payment method. There are ways that we can help optimize that to take advantage of things that are out there in the world today. So think about your company and what variables might drive value. From left to right on this chart, there's all sorts of things. There's over 10, 12 things here to consider. It might be improving days payable outstanding. It might be your cost per payment type. I'll go into that here in just a little bit. It might be taking advantage of early pay discounts, as I'd mentioned before. What's your AP processing cost? Are you capturing all the discounts that are available to you? What card incentives are you taking advantage of in the form of a rebate incentive, trade terms, or things like foreign exchange? Are you sending money in and out of the U.S.? Are you taking advantage of third parties to help you minimize your foreign exchange costs? Card rebates, payment float, AP automation, these are all things within the payment optimization engine to consider. Supply chain finance, dynamic discount are a couple of examples. And then the wheel at the very bottom is one that I'll go into here shortly, and it's the focus on using virtual card as a form of payment. Again, interest rates are great, but you know what happens when they go up? These are all things to consider in driving increased value for your company. I want to go through some pros and cons of different payment methods. So as you think of paying vendors today, there are different ways to send money out the door for your vendors to receive. First one I want to talk about is check. So some pros of check: universal acceptance, no specialized equipment. Pull your checkbook out or you run a check run, the thing prints out, you fold it, stuff it, seal it, stamp it, and it goes out the door. It's very easy. I don't know about you, but I can't remember the last time I personally wrote a check. I used to carry my checkbook with me and I wrote checks all the time. But things have advanced, things like electronic payment methods like debit cards, and personally, just think about your own personal way of making payments. Very, very rarely are we writing checks because of the pros and cons of that payment method. Some of the cons, I'm not going to go so deep into this because you're all probably well aware of the costs of printing, mailing, and the waste that's involved in writing a check. Checks have low security. It's the #1 source of fraud. When you write a check, your banking routing number and account number are printed at the bottom of the check. You've all read stories about check washing and fraudulent payments and checks. It's just prevalent. It's the #1 source of fraud. Checks are slow, time in the mail, they're inefficient. They're inefficient both for your AP organization and they're inefficient for your vendor for them to receive. There are other costs that are involved that I didn't even list on here, such as costs for lockbox or costs for positive pay that quite often go with writing check. Next one's ACH. So an ACH is the electronic clearinghouse for you to send payments to someone electronically. The pros for this method is it's very efficient, it's reliable, and it has a lower cost, much lower than check. So you get your vendor's bank account information, you put it in your system, you're then able to send them from your bank account to their bank account using the ACH process. Some of the cons with ACH and things you might not have even considered are the cost of the bank fees. That probably makes sense. Some of your competing priorities. Well, what do I mean about that? Competing priorities in the fact that if your accounts payable department is making the calls to your vendor's accounts receivable department, do they have the bandwidth to make those calls and to gather all of that information? You know, they've got competing priorities and other things on their plate. They're doing the enrollment process. The other thing is privacy. When you set up someone with an ACH, you're going to house that supplier and that vendor's banking information. Where is it going to be housed? You know, there's privacy concerns. Changing banks. How often do your vendors and your suppliers change banks? It's more frequent than you might imagine. And if your vendor changes banks, you've got to update your system with their banking information in order for you to continue within that ACH process. The other thing that's not listed on here, which is a con, is a lot of ACH, when you send it, doesn't provide for your vendor good remittance data. That money comes over and they wonder, well, what's this payment for? You might have been paying multiple invoices with one ACH. Well, a lot of times that remittance data is not going to have all the information on there for them to reconcile their books. And then the buyer really doesn't get a notification that money goes out the door. They don't get a notification that it was received, it's settled, and again, there's friction between accounts payable and accounts receivable in some of these processes because people are picking up the phone and it's just not as efficient as you might think. Some pros and cons of virtual cards. Some pros are extremely wide acceptance, and I'm going to talk about the number of companies that accept credit card today as a form of payment. It's an easy implementation. The availability of funds, float, minimal risk, remittance detail is very rich, and then there's a rebate to the payer organization for utilizing a virtual card program. Some of the cons are there is a cost of interchange to the suppliers for them to accept a card. So when you make a virtual card payment to a supplier, when they run it through their merchant processing terminal, when that settles out, there's an interchange cost for them to process that payment. If we do some math and some of the statistics that are out there, it's becoming more important to manage your payment methods due to these costs. Research uncovers check costs anywhere from $5 to $8. You think about that cost, it's everything from hard costs to soft costs. ACH is as cheap as 10 cents to $2. Wires are $10 to $20. Card is actually going to pay you to use a card, a virtual card as a payment. You typically get a rebate from anywhere from 25 basis points to 175 basis points. With ACH, one of the things that are in the news to think about is same-day ACH. There was an article that came out last week that talked about same-day ACH coming to 2016. You're going to have to pay for it. There'll be a surcharge for ACH. I don't know if it'll be as expensive as sending a wire, but again, there's costs that are involved in that process. The chart you see on the bottom left is typical payment method today. You saw that a few slides earlier. Some trends that we're seeing in payment methods that are expected to increase in the near future. There's going to be a 75% increase in ACH, 55% increase in card payments, 39% increase in B2B payment networks, and then a 36% increase in wire transfers. So if you think about where we stand today, which is on the left, and do some math on percent increases on the right, you'll see there's going to be a lot of innovation and a lot of activity around this payment process and optimizing and lowering your costs. Real quick example to have you do some math. I just picked a fictitious company that has $100 million in available spend. Again, that's excluding government taxes and payroll. You've got 10,000 supplier invoices. The average invoice amount's $10,000. If you spend 100% in check, it's $8. It's going to cost you 80 grand to make that payment. If it's ACH, it's $2. It's 20 grand. What if you added a card to the mix and you just did a third, a third, a third? So you would reduce your check cost from 80,000 to 26,000. ACH would drop from 20 to 6,600. And let's say you had a 50 basis point rebate on a card that paid you 165,000 on that $100 million spend. You're 33% of that 100 million is on card. Then you're actually going to be making revenue on your AP function of $132,000. So there's clearly value in at least cost routing payments. However, you've got to consider the cost of servicing the payment method itself. Very quickly, some ways to fix some high payment costs. On the left-hand column are the cost drivers. Right-hand column are some ideas to fix. I'd like you to think about that wheel and those different bubbles at the beginning of the presentation. Payment to a fraudster, the fix is to do some supplier due diligence, have a process in place. What's your invoice approval process? Duplicate payment, you can look at prepay spend analytics, payment to the wrong supplier, look at some automated invoicing systems. Many of you have spent significant money on investment in an ERP for that particular reason. Again, payments from paper invoices, automate that process. Payments after early pay discounts expired. Again, work on your automated invoice system to make sure the flow goes through so you can take advantage of any early pay discounts. Payment with no or wrong remittance data. Think of a supplier portal and your ERP system enhancements. What are some differences as it pertains to what some Treasury Bank offerings may be versus what some payment innovators might have in the landscape today? Understand, again, where your team excels in your finance group, and then think about where you can leverage a partner's expertise in order to leverage your internal strengths. So if you think about internally, you have an extremely high knowledge of the relationships that you have with your suppliers. So your supplier relationship, everything from your procurement team to your accounts payable and your treasury group, you know your suppliers front and back. You also have high knowledge of your internal process. And of course, you're all in the business to know your business better than anybody else. So you have an internal strength of business knowledge. A partner may have strength in scale, the ability to grow and to optimize a process. There may be a strength of that partner to sign your suppliers and enable them to take payment methods that you may have not even thought that they would. And then finally, leverage a partner that has high degrees of technology expertise and is already an expert in security, fraud mitigation, and compliance. So think about that. Think about the payment ecosystem as it stands. I want to give you just a few examples. On the left-hand side are some different methods. Payment methods are created by what we refer to as a banking system. So check, ACH, wire, and cards. And examples of banks in the U.S., Chase, Citi, B of A, Wells, U.S. Bank. All of the methods that you see were created by that system. Payment services or third-party processors are created. Payment services are created by what we refer to as third-party processors. So everything from merchant acquiring organizations, gift cards, online checkout, person-to-person payments. Third-party processors wrap value around a payment method. So some examples are First Data, PayPal, Dwolla, and Apple Pay. Some Kansas City-based examples, Euronet and Leewood. It's an ATM and a payment network. FC Stone is a foreign exchange and a commodity third party up in North Kansas City. Commerce Vantage is a regional bank, but they have an internal third-party processing. And Store Financial is a Kansas City-based example of a third-party processing company. When I say this, I draw an example to doing online checkout today. So if you go to a website that you order something and you go to check out, I don't know about you, but if it doesn't have the PayPal button there, I get a little frustrated. I've got to pull my wallet out and get my credit card and type in the address, and does the shipping address link up with the card address, and it's just inefficient. And PayPal and Apple Pay, they just make that process so much more simpler and streamlined. So they wrap a value around the method itself. Some background on a virtual card. So virtual card basics. Virtual card is a business-to-business payment using the MasterCard and Visa payment network. It's a single-use card for the specific amount, and it's sent to the vendor electronically. It's virtual in nature. It's electronic. It's emailed. It's a virtual email. It's a 16-digit payment number that's provided to a supplier. Virtual cards are set up to pay invoices. They're delivered securely. It's a secure PCI delivery, and typically they're delivered via email. Some payments are delivered via fax or e-fax, or they're virtual cards or ghost cards that may be placed on a portal that you will typically see on vendors that you pay quite often that you just push payments to. So a virtual card is not a purchasing card. So many of you on this phone have a commercial credit card or a P card in your wallet. I use a purchasing card whenever I get on a plane and I have to travel and go to a trade show. Purchasing cards, multi-use, it's a plastic credit card, it's got a revolving credit facility, it can be used over and over and over, typically used travel, incidentals, and office supplies. When you do use a P card to pay an invoice, it doesn't provide the supplier or the buyer with that rich remittance data that they need. So if I'm an accounts payable clerk and I want to make a payment for an order of paper that I received, and I call Southwest Paper Company and I pay them with my purchasing card, they key it into their system, but nowhere is there an interchange, is there an exchange of good remittance data. So it can be quite inefficient to pay with a purchasing card. A virtual card is part of a payment method. Again, the delivery via secured email. On the left-hand side is an example of what an accounts receivable clerk might receive in their inbox. Inside of the email is everything that they would need to key into their merchant processing terminal in order to settle those funds. So everything from the number itself, the expiration date, the security code, and you can pay multiple invoices with a virtual card payment. So you could have all the invoice data and multiple invoices. So the net amount paid on the card would equal all of the amounts of the invoices that you're paying. So again, think of how a virtual card might coexist with other payment methods that you're currently using today. So check, ACH, and wire. So why do suppliers accept virtual cards? So if you're an accounts payable or a finance executive and you're considering adding card to your payment mix and using some of the technology that I've already covered, why would your suppliers take a card? And, question that I get asked quite often is, what sort of level of acceptance should I expect if I engage with a third party to enroll my suppliers? What kind of success measure should I look at, or what should I anticipate if I sign my suppliers up to take this payment method? Some examples that I'll give you with our experience. So medical services buyers, so these are individuals who are paying providers such as clinics that do MRIs. This could be lab payments or physicians. We're seeing a 50% spend conversion paying medical services providers with virtual card. In the transportation and the warehouse business, where you're paying companies like FedEx, boxes, supplies, tape, we're seeing as high as a 60% spend conversion there to those vendors. And then a 10 to 30% spend conversion on some companies that are Kansas City based. Some examples would be law firms, utilities, and telecom. And in this experience, we're seeing over $3 billion in virtual card payments annually to these different buckets. So why such high spend conversion? How are we getting there? Well, the first and foremost, your vendors are already accepting cards as payments. To give you some math, the U.S. GDP is at 17 trillion. In the U.S., card payment volume is $4.4 trillion. Do some economics on that, and assuming a 2.5% cost to take a card, that's $110 billion in card fees. And there are over 8 million merchants in the U.S. that accept MasterCard and Visa. So number one, high conversion because people already take cards. And number two, which I'll give you some information on this, companies that are getting this conversion, these type of conversion numbers, are employing a third party with some horsepower in order to convert some suppliers. What does horsepower mean? It means an engagement process with the supplier that actually forms a relationship and an education process to explain exactly what this payment means. Why do suppliers accept virtual cards? This was a survey by Kaiser Associates in 2013. Over 80% of the suppliers in the survey answered yes, they'd likely take a card payment if a client mandated it as a method of payment. Number one reason is a quick payment. Key it into your credit card processing terminal. That payment's going to be settled into your bank account within 24 to 48 hours. It's a guaranteed payment. The money that is sent is a guaranteed form of payment. Vendors like to be looked at as a preferred vendor. In accepting virtual card, quite often you can be preferred. Processes, decrease cost, and decrease AR staff follow down the line, but the number one reason that suppliers accept the card is to get a quick payment. Some supplier enablement success stories. Again, when you have a third party that is really managing the relationship between your accounts payable group and your accounts receivable organization that your vendor has, we would suggest that you would need to have someone that has a special focus on your suppliers, that gives them detailed payment education, much more in depth than just those 2 or 3 slides that I went through. Working with the supplier's merchant acquirer to get lower card acceptance costs. And again, continuous supplier relationship management. This isn't just a one and done situation. This is a continuous relationship, because as you add and subtract vendors, or vendors leave the industry, or you switch a vendor because of a better price or a better value, we would work with them to continually manage that relationship. Supplier benefits, again, I just went through those. Faster payment, they love it because it reduces their days sales outstanding. Lower acceptance cost, great remittance data, which I showed you on that example, and improved reconciliation efficiency on their end and on your end as an accounts payable professional, and again, more secure payments. Virtual card is the most secure form of payment that you can make because the virtual card can only be used to pay for the invoice that it's attached to. Not all virtual card programs are the same. The left-hand column are supplier participation rates. The higher the rate, the higher the acceptance. Again, the lower card acceptance cost is on the horizontal, starting from high to low. A standard bank program, you might get a lower supplier participation rate because the cost might be too high. When you look at an optimization program, when you're dealing with the supplier, you can add in different things like large ticket adjustment capabilities, variable fees structure. So we offer what we refer to as lower cost cards for your large suppliers, and we're part of what we refer to as a private network of virtual cards. So some keys to success, and then we'll open things up for Q&A, just a few more minutes here. So what's involved, who's going to do what, and then the benefits of a third-party processor. So who does what? In particular, as it pertains to virtual card as a payment method. Third-party processors should provide all the value-added services as part of a payment optimization program. Most importantly, supplier enrollment. So the number one thing when you see success rate go from 5 or 10% to that 30% benchmark that I had mentioned earlier, to get to that 30% mark, you're going to need to have a very robust supplier enrollment campaign. So that's number one. Number two is the efficient payment delivery. Number three, great reconciliation for both supplier and the buyer. And number four is ongoing supplier support. So if you look at this wheel or this pie, the two things that are the most important in our eyes are number one and number four. To have supplier payment portals that your supplier can log in and see the payments that they've received. Escheatment, if you haven't done research and looked at the risks of escheatment, I encourage you to do so. I had a very interesting trade show that I was at in North Kansas City last week, and I learned a lot about escheatment, and state organizations and the government are very interested in escheatment, so you should be as well. 1099 filing, virtual card provider is going to provide the 1099 filing to your supplier. It's part of the process, it's part of the compliance process, so you don't need to worry about it. And then compliance. We, as a third-party processing company, are a PCI compliant organization. We take compliance very, very seriously. Our reputation is based on our ability to have a high degree of security and compliance with all the rules and regulations of the electronic payments business. Why are companies not optimized today? Just a few things. They don't understand the value of payment optimization. It's my hope that after today you do understand the importance of it. They do not use a third-party processor. You might have relied on some limited internal resources, such as using the accounts payable clerks or your accounts payable group to enroll suppliers. There's more strategic things those individuals could be doing. And then companies might not be optimized because they just had a bad experience. Maybe they tried making payments with P-card. Maybe they tried a virtual card program and it just fell flat and didn't get off the ground because their suppliers just weren't engaged, or there wasn't good remittance information that was exchanged between the two parties. Maybe there was some fraud involved. There are just all sorts of different bad experiences that people just say, oh shoot, I'll just go back to writing checks. You know, it's just the easiest thing to do. But hopefully after today you've got an opportunity to see some of the math involved and see some of the other payment methods and options that are out there. So a real quick summary, supplier payment optimization is very important. You've seen the math behind it. The cost implications are significant. I don't care if you're paying 100 payments a month or thousands of payments a month. There are available opportunities for you to become more efficient. I'd like you to think about that available spend in those three categories that I'd mentioned, strategic, core, and non-strategic. Think about how your spend conversion looks today. Are you at 30%? And do you even have a program available? Have you taken an opportunity to analyze your accounts payable file of your supplier spend, of your available spend? Have you considered partnering for expertise and for horsepower? These programs are free. Take advantage of them. Take a look at your vendors who have high value and low units, and then you have some vendors that have low value and high units, someone you're paying a lot. It's my hope that you learned something new today, and I really hope I challenged you in a way to think about where your organization stands, and I gave you something to think about. I do want to give you a call to action and give you an opportunity. As I'd mentioned, it's the end of 2015, so we are beginning the planning process today. We've actually, in the executive team here, talked about where our organization is headed, and we're beginning our business planning process for 2016. So here's a call to action for everybody on the phone. I'd like to offer you a free analysis of your supplier file. If you email me at the address that's listed on this page, I will analyze your supplier file. I'll send you a template that you can use. All you have to do is simply export your file into this template, and within 2 or 3 days I will come back and we will schedule a free 20-minute consultation on the results. All of that is an opportunity for all of you that I've opened up. I mentioned it to Bruce yesterday that I would do it for free for his organization, and he said go for it. Give that call to action out as people are considering their 2016 planning process. So, Bruce, with that, that's at the end of my deck. What questions do we have?
All right, well, Doug, thank you very much. We do have some questions here, and I'm sure we'll have a few more in a couple of minutes here. So let's sort of take these in order here. Here's a question. Why would wire payment also increase? Is it due more to business growth?
I would look at the actual cost of what banks are incurring right now. Banks are increasing their costs from audits, from government regulations, and they are looking for ways to pass that on in the best way possible. I look at the volume going up as a cost, and the wire itself just as a total cost. So I would anticipate it would go up as well.
Yeah, I would just add that given some of the work I've done with some of my treasury clients, that the cost of wires, the actual unit price is going up, and there are different parts to that. You would think that one price would do it all, but there are different components, just like a car where you have extra add-ons. So the total cost per transaction could be quite high, especially if the transaction value is low. The idea of using Fed wires or international wires to pay $500 bills doesn't really make a lot of sense. Even if the prices don't increase, they're just high to begin with.
That's a great point. So if you look at that bucket with a non-strategic supplier, what's the purpose in paying them with a wire that costs $20 if it's not a strategic vendor?
Well, that's a very good point. I think you have to make sure that you keep your important vendors happy, and the other ones, well, quite honestly, it's like triage. I guess they could wait a little bit. Okay, here's a question. What are the differences between a virtual card and a corporate credit card?
So there's really, well, there's a lot of differences. A corporate credit card is tied to a credit facility, and is typically used for travel and incidentals. A virtual card is used to pay invoice accounts payable spend. So it's typically a single-use card. When the card's redeemed to pay the invoice, the number that was generated for that payment disappears and is gone forever. A P card or a commercial credit card that you're probably holding one in your wallet right now, that card never changes. It might change, I guess, if you get issued a new card, but it's typically used and has an open credit facility.
Okay, let's see. Here is a question. With virtual payments having 1099s being done automatically, does one simply turn off the 1099 feature in the accounting software? Does this mean the IRS gets more than one set of 1099s?
Well, I can speak to the payments that we send. Your accounts payable process, I would probably defer to your treasurer or your CFO. When we send a virtual card to a vendor, whether it's one payment or 1,000 payments, we will take care of the 1099 filing for that payment. So I think it would depend on your process. How about you as a treasury expert, Bruce? What would you say?
Well, I think it's really a function of your AP software. If we're talking 1099s, 1099 goes to the legal entity. How you pay that legal entity? Probably immaterial. But that's a theory. Now, how your accounting software looks at it, I would think that you'd want to go deep into the bowels of your software and see how they actually accumulate the total spend for the legal entity that you're required to send a 1099 to.
Yeah, great point.
I know a lot of vendors, a lot of AP files in which, for all intents and purposes, you're sending multiple 1099s really to the same vendor because they have 6 different addresses, or maybe they have 7 different tax IDs. Mm-hmm. It's a little tricky in that one-to-one, one-to-many relationship, but I think the answer is to look into your software and try to make sure that you're sending at least one 1099 to every tax ID that you have.
Okay.
I don't know if that's a complete answer, but that's where I'd start.
Sounds pretty good to me.
Okay, let's see. Just another question. Do suppliers like it if you move to virtual payments from ACH and they net less? I would think that could be a hard sell.
So it could be. One thing to think about is if you have an instance with a vendor who you do not pay often and don't have, or perhaps they don't want to have you house their secure private banking information, that's a perfect individual to send a card to. Part of the enrollment process is to make sure that supplier, and again, this goes into making sure that you are, as a third-party provider, are optimizing the relationship between the accounts payable organization and the accounts receivable organization. So is better remittance data worth the cost of the interchange? Is that strategic supplier able to receive a card if perhaps we can offer them a lower cost card? There are lower cost cards that are available that we have access to as part of our proprietary network, and I'd be glad to talk to anybody about what that means. I certainly don't have time on this call today, but I'd be glad to answer any questions about what does a lower cost card mean to a supplier.
Yeah, I would only add that when you net payments, and again, this may be a bad explanation because it depends on the specific situation, but when you net payments, sometimes the AR department on the other end sees a net payment net of this and that, and goes, how do I apply that? Sometimes netting can cause more problems than it solves. It just depends a lot on really the billing system, so that when the biller bills and the payer pays, they net it all together, then that means that the biller might have a tough time applying all the payments.
Yep.
So I think the thing to consider here is you just have to remember who your client is and a little bit about your AR or somebody else's AP. And sometimes you might want to have individual payments. Other times you might want to net it. Just difficult to say without knowing more specifics.
I would really encourage everyone to take a deep dive into their supplier file. If you haven't had someone do an analysis for you, I think that would be a great place to start.
I would just, to go off a little bit on a tangent, I've seen thousands and tens of thousands of vendors out there in an AP file, of which 90% of them are never used.
Yep.
That's an invitation to fraud.
Yep.
I know that we're not into fraud per se, but when you have so many vendors out there and you haven't used them in years and years, get rid of them. Yes, you have to set them up again. But if you haven't used them in years, you haven't lost anything. There's a tipping point, but it's usually it's an 80-20 rule where 20% of your vendors are generating 80% of the payments. The other vendors are never used, and that's just why do you have them out there?
Yeah.
Okay, here, getting back maybe on point. We process large, 25,000 plus, same day, next day payments and receipts. How could a V card play into this?
So as you think about when we receive a file from a buyer to send, let's say we receive a file from a buyer that has 10,000 invoices to be paid. That file comes to us. We import that file into our system. We put that file through a conversion process. That process then converts those invoices into cards, and those cards are then emailed out to the specific vendor. So we receive one file in and then send out all the individual cards. Now, if you have a portion or if you have a large file that you currently have that are set up with ACH, I applaud you and congratulate you. You are ahead of the curve. 50% of the vendors that we're talking to today are still cutting checks. I would consider or look at your total AP spend and the file that you send out today and look to see what is left, and perhaps those could be placed on a card.
Okay. And I think we've got time really for one more question here before we turn into a pumpkin here.
There we go. Well, it is October. It's almost there.
Yeah, that's true. Okay, so here's the last question, and again, for others, we have the questions written down here, so Doug will just have to get back to you sort of offline. Okay, when my company last looked at virtual payments a few years ago, supplier enrollment was difficult. Has that changed dramatically over the last couple of years?
Yeah, that's the number one thing that we hear. I talk to buyers. That's my full-time job, is to talk to buyers and ask them about their process. The number one thing that I hear is, oh, we tried this. We tried to use a virtual card and it just fell flat. Well, it fell flat for a couple different reasons. Number one, the entity that you agreed to do virtual card with made you do the enrollment. I would ask you to take a look at your accounts payable department and look at those people. Are they interested or passionate about picking up the phone and enrolling a supplier? They have much more strategic things to do. They're making payments. Their full-time job is not to call suppliers and explain and educate and enroll them in a process. Plus, they're most likely not going to take advantage of technology like we can. We can do an enrollment campaign where we could set up a supplier portal where they can simply log in and enroll themselves. Or, on the second hand, let's say you engaged with a treasury bank to do virtual card. We see this all the time too. Treasury Bank has a third party that only does enrollment. Maybe it's offset over to Visa Corp or MasterCard Corporation. It's going to go to this huge call center. Just think of a whole call center full of people that are on the phone. They'll make one phone call. Do you take virtual card? Nope. Okay, boom. Shut the phone off, go to the next person. When we look at our supplier relationships and engagements, it's extremely high touch, high technology, high relationship. We will use not only our relationship and our technology to maximize the percent of people that will take card, but we also have access to lower cost cards for those larger suppliers who aren't able, because of the margins, to accept card. So look at all of those things: supplier enrollment, ongoing supplier enrollment, and lower cost cards. The entity that you engaged with, if I had to make an educated guess, did not offer those to you as an AP buying organization, and I'd love to talk to you.
Okay, I think with that we're going to close down today's session. We do have a couple of questions left, but we'll just have to get to them offline.
Yes.
So I thank everyone. I'm sorry, go ahead, Doug.
No, I said that'd be great. I'll be glad to take a call offline or do an email exchange, whatever everybody's comfortable with on these extra questions.
Great.
Not a problem.
All right, good. Well, with that, we're going to sort of officially close off today's session. Thank everyone for attending, and we will talk with you again soon.
Okay. Thanks, Bruce. Thanks, everybody.
Bye-bye.
Bye-bye.